All right, we should be back up live on YouTube. Sorry about that, y'all. All right, we do have low impact news in about 3 minutes, just so you know. Let's see where we were in pictures here. John Novak took the same trade. Termination condition, everything says up, pulls right back. You guys getting a little crafty there. Great trading. Dave B, let's see what you did. Dave B has momentum on a 21, or a trigger roll on the 21. I always lose my mouse on this style. 13.2 says strong up. 5.1 has a picture perfect entry. And David B, you made money all the way up to the key areas. What a beautiful trade, Dave. That's it. Go swing clubs. Your day is over. Nice job. Paul, question from replay. Let's see what we have. Got a great top, absolutely. Tons of momentum. Trigger still outside when the third divergence hits. Maybe an instance to ignore this divergence. Paul, great question. And I'm going to give my 2 cents on it. And remember, guys, sometimes when I talk about something, for the sake of this classroom, I talk a lot about advantages. So I have 1, 2, 3 divergences, right? But those large are still outside. But I do have 3 divergences in the same spot, which we know can terminate a trend. And then I also have a third divergence higher than the previous pivot, which we know can terminate a trend. So maybe you start looking for other tiebreakers, Paul, in a case like this. You've already made money. You've already got money in the bank. You've taken profits a couple times. You could probably get to a 0 loss level on those final contracts with this much momentum. And then you can verify that momentum on the 8 range and say, you know what? They're going to have to come get me on that last contract. I know it's a trouble spot. I'm going to put money in the bank, but I'm willing to leave a couple ticks where the market shouldn't go. Because of the split trigger look, you'd probably want to put it behind this mid band on the 8 range, somewhere up here above the areas. But I think as you grow with the software a little bit and you see this many advantages, you may hold that one. If you are being adamant about exiting at a termination condition, well, then you had a termination condition. Hope that makes sense. Guys, management's the second half of what we do. Finding the entries starts to be easy. As you study the software, as you look at things, you're going to begin to recognize patterns and identify advantages, and then you're going to learn how to manage it. 10 km, beautiful, great bottom, strong triggers, no termination, picture perfect entry, profits all the way up. 10 km, I really don't think you could have done that any better. Alex G, termination condition, taking that pullback to the trigger lines. That's John Novak's, I think. Can I explain the short? So Alex G, this is a lower probability shot at a momentum trade. And it is lower probability for the reason that you just posted. It is trading into a termination condition. Let me get to the rules here. What this trade is, it's a momentum style trade, Alex. I hope you're with me in the room. And what it's doing is it's really identifying the advantage of such a good termination condition. It's identifying the change on both charts with the trigger lines rolling, and then it's looking for that area that's likely to hold based on the termination condition. Alex, ideally, just like you said, I don't care for this Fibonacci support, because if you go to rule number 2, rule number 2 says when price reaches an area and none of the trigger lines get through, well, then you have a termination condition below you. And this goes back to everyone sees things differently, right? If you've been trading Nexgen software for 3 weeks, 3 months, the hard and fast rule is, man, don't trade into a termination condition. It takes away your advantage of a clear path. The second, the growth that comes from it is you begin to recognize and trust Fibonacci and identify change in the turning of the market. And then you're in a position, Alex, through your chart reading, through your ability to recognize change on that smaller, faster chart, to take what may be a bit more aggressive trade and manage it assertively. Does that make sense? So while chart reading identifies the termination condition, chart reading also creates the opportunity to manage it. And the reality is that little 4 or 5 ticks risk worth the potential to get all the way down here to a key area? Absolutely it is for a lot of people. Great question, and great identifying that termination condition. Edge long here. All the trigger lines are above support. Because of the rules of termination condition, support's likely to hold. Just buying that edge, looking for continuation. Because it isn't a high probability trade, half out, stops up right at the first trouble spot. And Alex, this is another great example, and everybody in the room, a great example of using your chart reading. With all of these trigger lines so far away, this is an area likely to stop the market as it comes down. Everything lines up, right? Worth a low risk shot to get back to the trouble spot. Is it a high probability trade? Absolutely not. But once again, your ability to read your indicators is going to put you in a position to manage it assertively. So if divergence prints, his stop is right there to catch it. John, that's a beautiful trade. Great chart reading. Second divergence means larger retracement. You keep your stop in place, Paul. Nice job. Take profits all the way up. I bet that one made you sweat. But you waited for that lower retracement. You expected it because of your chart reading, and you could identify where that lower retracement was probably going to go. Keep your stops in the right spot. Paul, great trading. They're too fuzzy, Gio. Let me reboot them and just see if that helps. There's a little reboot on them. We'll see if that helps a little bit. John said he took a trend trade long in gold. Strong triggers, pull back to the area. Lost 12 ticks on this one. Smalls are still above the large, right? Smalls are outside. That lower divergence starts to push, stop where it shouldn't go. Guys, you're going to take losers. Anything that wins 80% of the time has to lose 20, right? Did you follow the rules? Is it the correct trade, the right direction? Did you have the advantages? If the answer is the yes, just move on. Gio, did that make him any better? I hope. And then Gary catching that same trend trade, stop where the market shouldn't go, profits all the way up. Nice job, Gary. Good looking trade. And if you took that long, multiple divergences, triggers inside, lets you know that it was probably going to push lower. Chart reading to get in, chart reading to get out. And then that termination condition on crude oil sure did work well, didn't it? Now we're pushing through. Geo, I'm not sure. John's working on a couple different things, trying to make it work a little better. You can always go to the YouTube link. And if you go to that live right there, you can take a look at it, and you can still post your charts in the room. He's always working on something, Paul. That's what makes John Novak John Novak. I don't know if you guys know this. Man, he does everything. I'm going to go into my first break, guys. I need to reload my water. Not fuzzy, Justin. Cool. Thank you for that feedback. Happy but never satisfied. It's why you guys have the best software on the market. It's why you guys have the advantage of recognizing where the market's likely to continue, where it's likely to stop, where it's likely to go. Because he is happy but never satisfied, and he's always working on making things better for you guys. That being said, I'm going to leave you. That's crude oil. What's S&P doing? Let's see what these termination conditions do with those triggers so far away. I will be back in just a couple minutes, and we will get into that second hour. We'll look at your charts, but let's spend a lot of time reading indicators, looking at the live market. If you have questions, post them in the room. If you take a trade, post it in the room. If there's something you want to talk about, let me know. I'll be back in just a few minutes, guys. All right, guys, I'm back. I love this picture. Not sure they gave you an opportunity to get in, guys. Once again, price reaches 1-to-1, support, that mid band's right there. Excuse me. Look at the distance of the large triggers. Price has accelerated away. And guys, this is the gap theory. This is what makes mid-bands termination conditions. This is what lets you identify big challenges on your large chart, areas likely to hold. I'm going to give you this one. When price pulls away from those synthetic triggers, it really accelerates and it hits a Fibonacci area, whether it's 1-to-1s, mid-bands, fibs. It tends to snap back just like a slingshot. And you see this very well illustrated right here. And if nothing else, it keeps you from looking for those shorts. You're like, oh, well, I had 3 divergences. I should be going short. Those large triggers tell the story. And very often when price, once again, that fight between buyers and sellers, the buyers push up and lose momentum, and the sellers make it right back to that key area. Next-gen users, you know where that line in the sand is. Excuse me. You know through Fibonacci where the buyers have set up camp, and the buyers push back, and you can see the loss of momentum. You can see the loss of momentum, and the sellers give them a good shove, and now the buyers unleash, right? And they finish the move to the next key Fibonacci area. And you'll notice that that key Fibonacci area, absolutely none of the trigger lines have broken through. We can see the sellers begin to mount an offensive. So you're going to start to use your chart reading over and over to identify these areas, to identify advantages. And if you scroll back on the S&P today, price reaches a key Fibonacci area. Notice how the large triggers don't follow along. Price snaps right back. Key Fibonacci area, mid-band, large triggers a full bar away. Price snaps back. Guys, everything we do revolves around patterns, pattern recognition. Accelerates all the way, mid-bands, large triggers don't follow. All the way down below, large triggers don't follow, and price snaps back. Guys, this becomes a pattern that you're going to recognize every day. Every day you're going to see this, and you're going to begin to put yourself in a position to make good decisions based on the patterns that you recognize. Paul, great exit on the pivot stop out. No divergence, but directly into a termination condition. Great chart reading. 13.2. You're going to sit this one out and see what happens. Paul, I think that was a great plan there. Gary, let's see what you did. Gary's on crude oil. Has anything can happen triggers, right? One of the things that I talk about, and there's a reason that it's the first thing that I talk about, guys, is that odds favorable momentum just gives you an advantage. So we're losing momentum, and we've lost momentum with divergence and anything can happen triggers. We lose it again, and now we've even shifted the trend, and we've lost momentum here. It doesn't mean that this market isn't going to continue down. All the trigger lines break through. But what happens here is with this many losses of momentum, it's reasonable to expect a little higher push. And maybe you just wait for a market flow signal, wait for something, look for those higher areas. But you can read that momentum on the charts to help identify that advantage. And then we can look for what we call a continuation style trade. That loss of momentum pulls us right back to the mid band. Look at your large triggers once again, guys. everything says down. We get a snap back to the small triggers when they roll at almost the same price as the short. Sometimes there'll be an opportunity for continuation. And we'll just see what happens. But those losses of momentum push us up to that higher area. John says, all triggers down now. It's hard to take that one again. Absolutely. When the triggers roll against you, it becomes a lower probability trade. And do you need that trade if you're trading like this on the way up? Not so much. Nice job. So right now we're at a fighting point, right? Everything's below the areas. This resistance is likely to hold. Price reaches a mid-band. Large triggers don't follow. We can expect the market to close that gap based on patterns. And then 8160 becomes a very likely spot for continuation when we exceed these areas. There's your close to the gap. So far, expectations are true. Not necessarily a short trade in there to be had for the high probability trend trader. But guys, give me a Y in the room if you understand the concept here. It starts, this pivot's not from an area. This pivot's exceeded everything, right? We talked about identifying change. It pulls all the way back to the mid-band on the 13.2. And these large triggers don't follow. And look how price closes that gap, guys. Once again, that's that slingshot theory coming through. Once price closes the gap, then it's time to start looking for agreement. It's time to start looking for either odds favorable, which we don't have, so there's no reason to take a short, right? Eventually, you may close that gap back to the large triggers. We do have traders, and that's a part of their plan. So I'm going to recap just a little bit, and I want you guys to see this. I'm about to put this one in the room for you. Brand new traders, the most important thing that you can do, is just identify your trade. Learn the rules for when it's okay to get in. And I'm going to put an example plan for you right in the room. And then I'm going to show you why I did that. If I go to my market replay education routine, guys, this is your path to becoming a confident trader. While those charts work themselves out live, I'm going to do this. And the first one is posting your trades in class, guys, getting that feedback. Everything that you do should be done because of rules, because of patterns, because you have a very clear reason that provides an advantage each and every time you take that trade. Posting your trades in class, writing your rules on the chart. Here's how to annotate those charts so that we can have the best conversation. Identify everything happening, why you did what you did, and then you and I can have a conversation to make sure that you're holding yourself accountable to your rules, and I'll do the same for you. I'll begin to hold you accountable for your rules. So that annotation on the chart becomes paramount. And then track your trades in a real-time spreadsheet, or your real-time performance in a spreadsheet. Nexgen's already provided you a spreadsheet, guys. If you look in Nexgen Study Picks, it's there, and it's waiting for you to use it. The spreadsheet does three things for you. The first thing it does is it allows you to take each and every trade that you have and put it on the first tab. And that first tab, let me open up mine here for you. That first tab, I take a trade, I put it in the tab every morning. Everything that I do on Monday, I come back on Tuesday and I study that. What did I do well? Where did I need help? What's a habit maybe that isn't helping me out that I need to break? And I'm going to continue this process. Guys, I can tell you the first time I went live, I skipped this process. And then I filled out 3 of these spreadsheets. And getting back into the live market was a much easier task. The next thing you're going to do is you've identified your best of the best, right? You've gone through You've identified what it's going to take to get you into the market, what's going to give you the full advantage. So you're going to go to the Nexgen Trader favorite looks, that second tab, and you're going to start filling this up. Every time you see a high probability trend trade, fill it up. Every time you see an opportunity for larger profits or maybe to exit sooner, you're going to begin to work on your management plan. As you recognize those patterns like the large triggers a full bar away, you can take pictures, put them right into here. Identifying termination conditions. Guys, this used to be called the Mark Novak section because I was the king of trading into termination conditions. I began taking pictures of every termination condition that I could to train myself to not trade into them. And then as you start using market flow, you can put that in there as well. And if you download the most current version, under the client trade examples, you guys have been nice enough to provide an awful lot of pictures of high probability trend trades, giving me something to study, to put myself against. Every time I take a trade, well, does it look like Paul's perfect high probability trend trade short? Let's see. Strong triggers, no termination conditions, beautiful pullback to an entry, and profits all the way down to a key Fibonacci area. I can take this picture and then compare it to my personal favorite looks and make sure that I'm on the right path. And then most importantly, I can put my trades in the room and get that feedback as well. If you need help with the spreadsheet, you can ask here in class, you can ask your salesperson, but utilizing that spreadsheet is going to provide you an advantage because you're going to begin to see patterns that make you successful. You're going to begin to see patterns that aren't helping out. So when you're on this path, the step-by-step path to becoming a confident trader ASAP, post in class, track in a spreadsheet, guys. You have to learn the rules for when it's okay to trade. That high probability trend trade spreadsheet or checklist identifies those rules. That example plan that I just put into the room will help you identify those rules when it's okay to trade. Simulate your trades daily. Make sure that you're practicing on simulator, getting those repetitions in. Posting pictures in class to make sure that you're following those rules. You cannot practice the wrong trades, guys. It's muscle memory. If you're practicing the wrong trades, when push comes to shove, you're going to take those wrong trades because that's what your brain remembers. Simplify your plan. Keep it simple in the beginning. Highest probability. Let that knowledge work you into the medium probability. After class the next day, download replay data, go back and replay the day. Fix your mistakes. If you skipped a trade, take the trade. If you took a trade that you shouldn't have taken, maybe you were bored, don't take the trade. Take the pictures of the correct trades, bring them to class, let's talk about them, and repeat this process every day until you always take the correct trades. Notice that it doesn't say till you win every trade. You're not going to win every trade. You're going to learn to accept losers as a cost of doing business. But if you're always taking the correct trades, and those correct trades have been proven through study and simulation to win more than they lose, well, then you should be guaranteeing yourself that you can win. And that's when it's time to seek out maybe one of those funding pages, something like Apex, Elite, or Top Step. Go through and pass their combine. Let your great trading, your good rules, trade someone else's money. Paul, everything says up, everything says up, everything says up. This is what we call a pre-trade picture, the come and get me picture. And you'll notice Paul hasn't even had a reversal bar yet, but because of the study and the time he's put in, he recognizes rules 1 and 2 met on the 13-2. He knows exactly where his areas of support inside of favorable large triggers are. He's even confirmed it with odds favorable momentum on the 13-2. This is Paul. Will take this trade hell or high water. There's absolutely nothing that could keep him out of this trade, right? It's a good look, Paul. Assuming that was the ES. And it didn't quite get him. Sometimes it's not going to give you an opportunity, guys. It's just not your trade. Paul or Gary, you're still in your combine? Good. I'm a big fan of the combines, guys. I've watched people blow out tens of thousands of dollars trying to trade before they're ready. If you think you're ready to go live, if you followed your rules, you have your checklist, you've written your plan, you're consistent on simulator, trading prop funds like Apex or Elite or Top Step will actually give you a combine. Gary used that word, combine. They will come through for a monthly fee, and I know that Apex is doing a special right now, like 80% off of the cost. Um, you can put together, they'll put you through a group rules. You have to manage your money, not blow out your account. You have to be consistent. And if you pass their trial, well, then they'll fund you. And I believe they give you your first 12,500 in profits, and then 90% after each of that. You're ordering a new computer to trade Apex. I like it, Gary. I've got my gaming laptop. I have very few problems. Very few problems with it. That was Apex that I just looked at. And guys, I'm not advocating one or the other. I'm just saying that these are available to you. Paul, I am not a gamer. I'm a day trader. But gamers sure make nice computers. I will get shot up an awful lot in Call of Duty with my oldest son when we play. Actually, since they're in Texas and I'm in California, I may have to buy an Xbox just to play with him on the weekends. Guys, holding pattern on the ES, right? Here we go, crude oil. Mid-band reached, closes the gap. Now we get a full reversal. Now we start to get those strong triggers, but we've got some areas that need to be worked through, right? Paul? I love it when Paul lobs one at me. What's the second divergence likely to make happen? Well, Paul, I'm glad that you asked. One of the patterns you guys are going to see is when all the rules are met, right? All the rules are met for a high probability trend trade. If I get these two divergences on my 5-1, that pivot stop out, very often I get that same pivot stop out below that exceeding and then coming down typically exceeds that previous pivot. Remember, it is two losses of momentum. You still have to keep that in mind, but it helps you identify a nice entry. There's only one potential spot for entry here, but the fact that it shows up right at a pivot stop out, right at a mid band, right inside of favorable large triggers, and every chart agrees with the trade, it can intensify your chance for success. 2,700, Gary? And Paul, it just never came back for you, did it? I think 2,700 is a small investment when you talk about something that you're going to be able to do for the rest of your life, guys. I spent more than that my first semester of college on books, I think. Falcon would have been around 4,500. Paul, let's see what you did. Looks like that was the spot. Oh well, not your money. I like it. Did you guys, I know John quoted it a little bit today. I'm not going to read the whole thing in class, guys. This is a little bit of Mark Douglas wisdom. Mark Douglas was really a trading educator, and he talked about the mental aspect of trading. I'm going to give you guys this in the room. Go through it when you have a second. It'll change your world a little bit. Mark Douglas's ideas, and there's videos of him on YouTube. It talks a lot about the psychology of trading, and I think that there's a couple key points that as you learn to be a trader, as you learn to read your indicators, as you learn to trust rules, um, normal losses are a part of the upward equity curve. The key is to not to have abnormal losses due to failure of following your plan, breaking your rules. And that's such a key part, guys. And using a series of 20 to 25 trades to judge your performance, not one trade, not deciding that something's not working because it didn't work once, not trying to change the whole plan because that one trade didn't work. And I think that one of the biggest things, and where did it go? When you stop expecting to win every trade, you start to win most of your trades. Because your brain follows the expectation, guys. If I expect to win 70%, and I put my expectations low, if I expect to win 70% of my trades, it means that I expect to lose 30%, right? So when that happens, loss doesn't feel like a failure, it feels like a cost of doing business. And when that cost of doing business is just a normal part of trading, it makes it easier for me to accept them and to move on. What do we see right now on the S&P, guys? Another good workbook to clear your mind. I love stuff like this. The mental game of trading. Good stuff. 10KM's real name is Jared Tendler. He's just trying to push book sales right now. Not really 10K, just messing with you. I love reading stuff like that. I used to hate self-help books. Hated them. Don't know why. Had no reason, but I did. Jonathan, everything says up, nothing in the way. You took the short step back to support, worked out beautifully for you. Quick profits, divergence prints, take it off. Jonathan, once again, great execution, great management. You don't have to hit a home run every time, right, guys? 4 singles earns a run. It's the same thing as 1 home run. Keep putting it in play. Keep going for those high probabilities. Don't be afraid to take profits, but have a reason to do it. Nice job. That S&P is working out. Let's see if crude decided to change directions. All right, we're watching the fight on crude. Let's talk about it just live. If you see something I don't, let me know. I see a termination condition in the form of a pivot stop out. I see large triggers way down here below the area of support. I see one set of triggers low. I see one set of triggers high and turning. I see 3 divergences right at a key area. Going short would be suicide against the momentum. RJ, good morning. Which trend is changing? Crude? ES? Show me a picture, RJ. And it's nice to have you back in. Hope you had a great weekend, bud. We got our trend change on crude all the way over here, but nothing to do yet, right? These guys have to iron it out. Now I have a pivot stop out. Few bars coming down. My small triggers have rolled. My large triggers have rolled. Your crude traders are fighting it out right here. You say the ES is changing? Ooh, RJ, one of the most expensive things in day trading is an opinion. But I like that you put that, and I'm going to share my read on it. My trend is up. Guys, this is just quick chart reading. My large triggers are up. My small triggers are up. I'm 100% above this area. Large are up. Smalls are above the area. Everything is up. Trend is up. We do have 3 divergences, but the only thing that's even managed to go red yet is this tiny little small trigger on the 5-1. RJ, things that I see, this for me just says I've got so much leaning up. I don't even want to think about shorts. Because my brain, and guys, maybe some of you are like me, my brain goes, man, there's no way this resistance is going to break, and I take a couple losses. No way this resistance is going to break, and I take a couple losses. Well, everything, I've got 3 divergences. I had a pivot stop out, and I start thinking about going the other direction, which is really fighting the flow of traffic. When what I can do is just say, hey, you know what? Stuff's going up. Let's keep going up. Whoops. And then RJ, all of this. Oh, but see, RJ, the 5-1 is not going down, right? The 5-1 is still very much going up. And unfortunately, there's not a really high probability entry here. We're losing momentum. So great job on the recognition of that for sure. But we're going to let things happen a little bit. Absolutely on the 5-1. But remember, this is small and fast. We're going to use that 13-2, that broad stroke of the brush. And that's the one we're going to use to let us know when it's time to start looking. If you go the other direction, and man, I'll tell you what, RJ, I'm guilty of it. If you start trying to look at the 5-1 first, you miss the big picture. I love that you recognize the divergence. I love that you recognize the weakening of the triggers. There's that potential for change. But if it's really going to change, we're going to let some trigger lines roll. And if not, shoot, we're going to keep looking to trade with the trend. Absolutely. Oh man, RJ, you are in the absolute perfect 100% normal spot. There's this, when we start, and I should say when I started, I didn't know what I didn't know. And I tried to make a lot of predictions because I'm like, well, if I can predict what the market's going to do, this is going to be easy. And then I realized that my ability to predict the market was non-existent. So then I got super conservative and I wouldn't take any trades. And I used that phrase, not my trade, not my trade. This isn't it. This is not my trade. And then eventually I kind of settled into this. Well, I'm just going to read my indicators and I'm going to follow my rules. And my rules have been proven to win more than they lose. And it's all going to start on the 13-2. With everything up and every trigger line above support, the only thing that I'm thinking is that this market wants to find that next area of resistance. Just like it did here. Everything's above support. It's easy to say, well, the market reversed, but it reversed right into support and then finished the move. So right now, I'm not thinking any direction other than up, even though I don't have a trade yet. So I'm falling victim to that 90% of what I do is going to be reading my indicators. And then Joel, I think, just did it. Patience pays off, right? Just hang out. Relax. It all comes together eventually, doesn't it? And RJ, Paul replied to you, keep asking questions, lots of them. I am so thankful for the questions that you guys ask. And RJ, you're saying the 5-1 was coming to a termination condition? I didn't have one. At the picture that you showed me, let me answer your question before I move on. I don't have a termination condition on the 5-1. I do have 3 divergences. It may reverse the market, but that's not going to override everything on every chart saying up. And let me show you an example of it. If this termination condition is going to change the direction of the market, let me show it to you off the bottom here. These red triggers are going to turn green, and everything's going to work its way right back up into it. So here's an example, a similar look right here at 8:15, right? 8:18. The market repeats itself very much, guys. Let's look on the 5-1. What happened as it changed direction? So first we had a slowdown. This is the ES. Absolutely. Everything is above this area of support. RJ, do you see it? Just like the current market. Everything is above the area of support. I love this. This is a great lesson. If it's really going to reverse, the simple patience piece of letting these triggers roll, let the small get below, let the trend change, but let the large roll, let the synthetic roll, and then you can see how it starts that move down. Up here, we're only thinking long, even though it's starting to slow down. And then once everything rolls, gives a great opportunity. And we're kind of seeing the same thing right now. We're above the areas, and it's trying to push. We have multiple divergences. But if this is really going to hold, if it's really going to roll and come down and test lower areas, this trigger line is going to roll. These small triggers are going to roll. Things are going to get to the other side of this fib. So RJ, you nailed it, recognizing the divergences, the slowdown, the trigger line location. And now it's just that patience piece. Now we just kind of have to wait. Because from a large chart read, this is still an area of support with every trigger line above it, isn't it? Does that make sense? So right now we're witnessing that fight. We're witnessing that fight. So the background's red, but yeah, let's let the large indicators, that overall, that broad stroke of a brush, tell us that we have a better shot. Because right now, my 13.2 is not giving me strong shorts. And we haven't had anything get below this support yet. Price tried, triggers couldn't follow. This is just a hurry up and wait scenario. Great questions. And guys, not just RJ, this lesson's for everybody. Does everybody see what I'm talking about? You're going to start thinking short, but it's not there yet. It might be, it might not be. I don't know. I don't control it. Good stuff. I think I opened a chart and didn't look at it. Jonathan, we saw yours. Joel, we saw yours. Patience paid off. Gary says third divergence. Not going long yet because he's recognizing the same change that you saw, RJ. So he says, I'm not going long, but it's way too soon for shorts, and it's just holding pattern. Dave B. And Dave B, here's that great look, right? That slingshot. Price reaches support, and every trigger line stays up, and boom, straight to the top. You say, I say slingshot trade. I don't say slingshot trade. I say this keeps me out of shorts. Does that make sense? And Dave B, there's a big difference. This is a trade that if you take it, you're banking on this support holding, but you're fighting trend and you're fighting trigger strength. When I talk about this, all I'm talking about is that because of this gap back to the large triggers, I know better than to try a short trade right here. Does that make sense, Dave? Sometimes our chart reading doesn't give us a trade, but when you see this trend change and you see everything red and now there's resistance right inside of it, your brain's telling you, Dave, take the short, take the short. Come on, Dave, look, it's perfect. But your chart reading says, oh, we just reached all this support and the large triggers didn't follow. Sit on your hands, Dave. Let's wait for something better. Make sense? And then as you go through and you see this pattern over and over again, guys, in my spreadsheet, I've got a lot of those in here. Mid-band is a termination condition. So the large triggers don't follow. I'm not looking for long trades in here because of that termination condition. So just a little bit of chart reading. And then RJ, here's the S&P. 13.2 led the way, right? It's still going up. Pretty cool, right? So RJ, that's that chart reading, and this is what each and every one of you is going to be able to do. You're going to let the 13.2 lead the way. The 13.2 set up. The 13.2 said support was likely to hold. It doesn't mean that there was a long trade here, but what it does mean is that we weren't anticipating the short. We're just waiting for that opportunity for continuation up. And I'm telling you, the market fulfills expectations more often than you could imagine. All right, Gary, multiple divergences, no shorts. You said your rules weren't met. I think that's perfect. Either the rules are met or they're not, right? That's the only options. Paul, good top. All right, I'm going to beat Paul up a little bit. Not really. I try not to ever beat you guys up. Paul, is this good top any better than that termination condition with no momentum? Remember we talked about the market will have a huge fight sometimes. So while this is a termination condition, so is this. And when the market's trading in between two termination conditions, the highest probability chance is let it break and then look for the continuation, right? Does that make sense? George T, back at it. Let's see what you did. George T said when everything says up, every trigger's above support, everything supports the long trade, he looked for that opportunity with a market flow signal to get into the trade. George T, great heads up trading. And as everything continues up, he takes profits at the first trouble spot, gets to zero loss, looking for the next area. George T putting on a clinic today. All right, 10K, I'm trying to use a spreadsheet on your driver, but it's not letting you do that. It's always edit only. Send the request to edit, but no one. Okay, I got you. You ready, 10K? Easy peasy, man. All right, so let me give you the link. Just we'll do this together. We'll walk through it. RJ, you keep trying to predict. Show me a picture of your chart, RJ. I love it. I love this class. This is a lot of fun. All right, 10KM. Do it real quick. RJ, I have absolutely nothing above me on the ES. I mean, nothing. No termination conditions. And remember, those start on the 13.2. The termination conditions that we look for on the 5.1 are going to be that multiple divergences in the same area. So RJ, show me both. Oh, you've got a fib there. I see what you're talking about. Great place for a bounce, RJ. Absolutely. All right, 10K. So I'm at the spreadsheet. Click on it, pull it up. So this is John Novak's copy. It's view only. He's not going to let us have it. He's kind of selfish like that. He's like, you know what? Get your own. Super easy. I'm going to go File, and I'm going to download. And 10K, are you using Microsoft Excel, or are you using something like OpenOffice? But you have Google Driver. So what you're going to use then, 10KM, is you're going to need, download it as open document. So once you download it as open document 10K, pull it up, and it's going to show you one that looks exactly like the Excel version. Enable editing, and then once you enable editing, you're going to go File and Save As. You're going to save it as that open document spreadsheet right here. Maybe just pick a spot on your desktop and save it. And then what you're going to need to do, since you don't use either, in order to get the functionality of it, let me go back to the spreadsheet section real quick. You can use openoffice.org, and what it'll do is it will let you use that spreadsheet exactly like the Microsoft Excel. So that'll be able to get you in it. You'll be okay, because John's not going to let you use his spreadsheet, because then it would get vandalized all over the place. But if you use that open office and go through like that, it's going to help you out a little bit. And then RJ posting in, recognizing that fib on the 5-1 and saying, hey, this might be a good spot for things to slow down. RJ, you're doing an awesome job recognizing the momentum. You're doing an awesome job trading with direction. The one thing that we're going to work on, the one thing, RJ, that's going to give you an amazing advantage as you grow with the software is that rule number 3, being able to identify. You're welcome, 10K. I hope that works for you. It's working on the drive. Perfect. You just needed that one, right? Perfect. Awesome. Good stuff. RJ, the one thing that you're going to want to focus on a little bit is we're going to recognize those best of the best entries, those pullbacks, right to support, right to resistance. And these entries here are going to help you minimize your risk. It's going to make sure that you have room to your targets. But keep posting, because right now you're giving yourself a lot of advantages. You're giving yourselves the advantage of momentum, that nothing in the way. And then there's a whole section right here about identifying those perfect entries. And we'll get in and we'll start working on that one together and get you right where you want to be. Great picture though. I like it. You're trading with the direction. We're just going to get you that clear path. And then what is this? A 21.3 on the S&P. Isn't that cool? Multiple divergences from resistance. Push it all the way down to multiple divergences, which reverse the market. And now it's pushing right back up. Patterns, guys. First day on NT8. Yeah, respect them. Everything says up. The purple ones, I believe, are... Shoot, John will tell you. He's told me 10 times, and I never remember how to word it. He'll probably jump in and say something. And then, for those of you that can't hear me, there's a little reminder. And then Gene, 13.2 has momentum up. Looks like you took a pullback right to support inside of favorable large triggers. Looking to get up to that next area. Gene, that's a good looking trade. Yuri, same thing. Everything says up. Picture perfect. High probability trend trade. Target hit. Nice job, Yuri. Absolutely, Bob. Great question, and I love that you asked that. I'm going to start off too. One of the things I like to do with you guys is I'm going to answer your questions. I'm going to show you exactly what you need because I want you to be able to post charts. The yellow dots are one-to-ones, RJ, so it's a 100% Fibonacci alternate. Let me answer Bob's question, and then I'll come back and I'll show you where to find that information. All right, so Bob, are you using Snagit or are you using Capture? And they both work basically the same. Here's my Capture software. This is the one that when you get the free download, there it is. And then Snagit, you can see, has the exact same big red button. So it's pretty much the exact same. Snagit's going to have more bells and whistles. I'll go Capture for this one. If I click on the Capture button, if I hover over just this web page, it's one screen. It'll capture the one screen. Or I can click and drag and pick the spots that I want to see. Once I do that and I click the camera icon, it's going to give me this capture image preview. This is where I can go through and vandalize it and do all the stuff that I want to do on it. And then there's two ways to get it into the room. I'm going to pull just a little part of the room over here. The first thing I can do is I can click copy. And then once I copy, it's on my clipboard. I can Control V if I'm using, if I'm in the pop out, or, whoops, I'm trying not to get that crazy psychedelic. Or I can click upload, in which case Screencast will give me this address, and I'll copy that address, and I can put it right into the room. And when I click enter, then I've got those in there to share so that I can give you feedback. We can talk about anything and everything that you're doing. And then to take that same picture, absolutely. And to put it into your trade tracking sheet, guys, if you right click and just paste the screencast address in there, it's pretty cool, but it's not as efficient as it can be. Doesn't really tell you what's going on. So if I click on that one and I go to my Insert tab, I can turn that link into what's called a hyperlink. And a hyperlink lets me put the address like I'm going to Google or Amazon. And under text to display, I can put high probability trend trade winner, or I can put loser indetermination conditions. I can identify it every time. And then when I click enter, I have that active link so I can come back and do my study each and every day. And I'm telling you, the more pictures you take, the quicker you get to where you want to be. I've seen it 1,000 times. Over the course of the weekend, I did my market replay study. And if you look at my library, what was yesterday, the 21st? I think I started on the 20th. Those are all the pictures that I've taken in the last 24 hours. The more pictures you take, the quicker you get to where you want to be. The more you present them, the more feedback I can give you, and you're good. Great question. Thank you for asking that. All right, RJ, one-to-ones. John may have jumped in and answered the question. I'm going to show you in the glossary of common terms. It's really just a little bit of simple math. The one-to-ones are 100% Fibonacci alternates. They behave exactly like fibs. The one-to-ones print real time during the day, and it's just a measurement. But when you see these one-to-ones print, they become a very key psychological area. A lot of traders are using them, and it gives you the opportunity to identify real time in the moment where that market has the potential to stop, where it has the potential to continue. And there'll be a lot of times where these one-to-ones almost become a way to collect after the fibs. So I respect them the same way I would a red or a blue line. And then the small swing 1-to-1s measure the distance from A to B and A to D. Once again, math. I've got ADD, so it's tough. Oh, no, that's add. My bad. But you can see where these small swings come in. Absolutely. RJ, the yellow 1-to-1s, read them just like Fibonacci. You can't edit, Safia. Not sure why. Can you tell me if my entry and exit was okay? Yeah, I'll be right to your chart in just a second. We'll get you taken care of. And I'll tell you what, I'll edit it for you. And we'll go through and look at it from the terms of the rules, right? Here we go. So I'll take a picture of your picture real quick. And let's go through and take a look at what you're doing. RJ, John just put a picture of that up there. They are 1-to-1s from a small swing. There we go. He just put the picture for you right below again. That's one that you can save for a little bit. So Safia, let's look at all the advantages that you had. You're at the tail end of momentum, right? The smalls are working their way back, but they haven't entered. So we definitely have momentum to the upside. You have absolutely nothing in the way. So right now, you have the advantage of momentum. You have the advantage of a clear path. And now we're looking for an entry inside of favorable large triggers. And Safia, you entered right at an area of support, right inside of favorable large triggers. I'm going to say this is a beautiful trade. This isn't the ideal entry look because there's been divergences and the smalls are inside, but you're trading from the picture perfect spot. Everything set up with absolutely nothing in the way, and the market obliged. So nice job, Safia. And are you using Snagit or are you using Capture? I think Snagit. So when you use Snagit, I like to capture the picture. And before I do anything right from here, all of your ability to annotate is right up top. And then once you annotate, you should be able to use all of these tools. And let's see if there's a view. Sidebars there, so you should be good. That's when I click share, and then I shared a screencast. And when I shared a screencast, I'm not sure why some of you are getting a different look. Maybe it's a new Snagit. But I'll share the screencast and then I'll put it in the room. Oh, you need to pay for it? So, Safia, until you pay for it, let me give you a free version that'll allow you to do it. TechSmith.com/Jing. So this is your TechSmith capture, and it's going to work exactly like it. And when you downloaded software, it's probably already on your computer. So type in TechSmith capture, and that'll bring you to this one. Whoops. Figure out where that went. Well, I lost my TechSmith capture, but it's somewhere in there. And it's got the same big red button, and it's got the same tools to allow you to mark up the chart. And if you need any help with that, just let us know. We'll get you squared away. Gary, taking that long trend trade. Everything says up. You take the entry right above the mid band. Beautiful trade, Gary. Very well executed. Joel, I have a feeling. Yep, same trade. Even had market flow confirmation. Everything says up. Guys, this is just trading with the trend. Taking that trend trade until it doesn't work, right? Paul, you say you're doing the highly questionable trades on Sim to help with the boredom. Seems to be a pretty good way to keep busy without doing something stupid in a combine. All right, guys, it's story time. But Paul, it goes back to, and man, I can't stress this enough. Having been where you guys are, let me open this link. Such an important, don't practice the wrong trades. Don't take trades on simulator that you're not willing to take live. So quick story time. Back when I was younger, not so broken, I used to race motorcycles. I road race 600s, and we were at a race one day at Texas World Speedway, and it's a practice session, and I was out on the track, and I'm doing about 60%. I'm having fun. I'm dragging my knee. I'm having a good time doing wheelies, just being silly, having a great time out there. And the guy who would be champion that year passes me in practice, and he's going like it's the last lap, right? It's the last lap, and he's hauling butt. And I'm like, oh my gosh, this guy's crazy. Well, session ends. We go to the pits, and he comes directly to my pit, and he and I are friends. And he goes, dude, what are you doing out there? I'm like, it's practice. I'm just practicing. He goes, what are you practicing for? Last place? He goes, if you're going to practice, practice like you're going to play. You have to be able to perform in the practice environment, or you're not going to be able to perform when the pressure's on. So that being said, don't practice the wrong. He was absolutely right. I changed my practice routine, and the next year in a different series, I won the championship. So don't practice the ones that aren't going to give you a statistical advantage, or you're going to take the ones that don't give you a statistical advantage when it's time. All right, that was my soapbox. John Horde, let's see what you did. Momentum to the upside. 1-to-1s are getting close. You say entry on the pullback. I don't know that there was a pullback. That's a little stab on a 5-1, but nothing to base it out of. Nice job making profits. John, you're at the tail end. Everything says up, but your trigger lines don't support so well, and your 8 range definitely doesn't give you an advantage. Looks like your advantage came from down here, without a doubt. But those 1-to-1s are still far enough away. They're on the radar, but they are not in the way. Gary says, if you're bored, annotate charts and post. It gives Mark something to talk about. Gary, I appreciate that so much when you do that, because it's nice. The Giants were great at practice. I guess the Cowboys weren't, huh? They didn't work out so well last night. All right, guys, let's see what the market's doing real quick. I'm going to take a second and relax. We hit all those trouble spots, didn't we, on crude oil? Now we're trying to break through. Patterns doing what patterns do. What's the S&P doing? Everything still says up, right, for the time being? Everything still says up for the time being. Guys, I'm going to leave you with this one. We've got about 45 minutes left in class. If you have questions, post them in the room. If you have pictures, post them in the room. If there's something that you need help with, post it in the room. If you've got a cute dog, post a picture in the room if you've never posted a picture before. I want you to get in the habit as early in the process as possible of just raising your hand as much as you can so that we can get you comfortable with everything that you're doing. I'm going to mute everything for a minute. I'll be back in a few, and then we will finish off. Back in a few, guys. All right, guys, back in. I love it. Post your comments. Let's talk football. I love it. So, guys, let's look at what's going on. Can we all agree that we are in a strong uptrend on the 13-2? Give me a Y in the room. Everything says up, right? Everything says up. All the way from 4006. So if we come all the way back to that 4006, I want you to see something. Well, there's a pullback to the mid-band. Those probably didn't make it. There's your second pullback to the mid-band. So when I have a strong trending market like this and everything says up and everything's going in one direction, and these large triggers on the 13-2 are dashed on the top and solid on the bottom, guys, this means the market's in a strong trend. When the market is trending like this, when there's no fibs there, everything's going up, you can buy that mid-band until it stops working. And you'll notice that it hasn't stopped working yet, right? Eventually, one's not going to work. But until an area is reached, everything still says up. Notice that when it pulled back to this mid-band to these 1-to-1s, every trigger line was still up, right? There it goes again, right off of the mid-band. So guys, this is not a high probability trend trade, but what this is taking advantage of a smaller, faster chart in a market that is trending aggressively, and then the same rules of engagement apply. Being able to recognize change on the smaller chart to help you identify change on the larger chart. All right. John says Dallas lost before they took the field. George, you say last week Russia announced it wants to be paid in gold for all of its oil exports. May move that gold a little bit. Michelle, Dallas held their own. You were nervous there in San Francisco. You know what? It was funny. I walked into the hotel last night here in California, and the game was up, and I'm thinking, all right, go Cowboys. And then I looked around, and everybody had on San Francisco stuff. I forgot just for a second that I was in California. Glad I didn't get loud. And then John replies, just trade what the charts say. All right, Gary, let's see what you did. Gary trading that strong trending market. Until it doesn't win anymore, he's going to keep winning on the way up. Nice. Doing it again. Stop set too tight. Now it's going up without you. Yep, got to give him room to run. Definitely have to give breathing room, guys. Paul, beautiful trend trade. Everything says go. Nice trade. Could have held for 10 more. Didn't have to. All right. You can't say Mark said. Guys, what told you to wait for those areas to clear? Awesome. Thanks, Jay Blay. I don't know where Orange County is. Termination conditions above, termination conditions below, right? That's what's said to let those areas clear. Your indicators told you that these were lines in the sand. Oh, Huntington Beach. I think we drove by there yesterday on our way up. We made it to Santa Clarita last night. Yeah, we're heading north. I think we're going to finish the move up to Sacramento today. We kind of just went through LA. We didn't make any stops there. We stopped in Newport Beach, had lunch at a great place that one of our Nexgen clients told me about. And now we're going to head up towards Sacramento. I'm going to try and find a round of golf somewhere up there. But yeah, the indicator said, let the area break. Mark just echoed what the indicator said. Gary, that's all right. It's a good lesson to have when it's not your money. Paul, I love this though. 10 and 26, quick 360. Nice job. That little bit of patience, right? Makes a difference. Makes a difference. We did not drive the Big Sur, Justin. The 101, like the whole Pacific Coast Highway, is nothing but it's nothing but roadblocks and washouts and all that sort of stuff. So we're trying to stick to 5 and doing a little bypassing. Paul, once again, trading with the trend, trading with direction, picture perfect in a trending market. Take the trades when everything agrees. Jonathan, same thing. Trend trades till they stop working, right? Could have got a couple there. Nico can hook me up with golf in San Francisco. Ah, that'd be nice. I don't think we're going to do San Francisco this trip, Michelle. We thought we were going to, but with all the construction and the damage that was done, I think we're going to come back and do it another time. Because we want to be able to spend a little bit of time there. We've got 7 days to make it to the job site, or 5 days. Gary, you say, look how far away the mid-band are in the 8 range and the 13.2 on the ES. So there's that divergence, 2 divergences. What did your 8 range tell you? Everything is accelerating, isn't it, guys? Look at the acceleration. Look at the acceleration. Those large triggers are so far away. It may snap back. RJ, are you with me? Remember what we said, RJ? If it's going to roll, you're going to be able to see it, right? And guys, where's our first target? Or maybe not even a target. Where's our first spot with the highest probability of creating a bounce? Mid-band, right? Yeah, I will definitely let you know, Michelle. And I love meeting Nexgen users when I can. I think it's awesome. We're all in this thing together. And I haven't met one that I haven't liked yet. Not yet. Hopefully they all liked me. But RJ, I love this. This is a great example. Remember we said keep taking them until they stop working, right? There's that one. There's a lower divergence. There's the small triggers working their way down. Then everything starts to roll. And notice that those large triggers get below the synthetics. Large triggers get below the synthetics and this thing starts pushing down. And this mid-band is a very likely first target. It's just chart reading all day long. And then I can come through. I've got a 21-3 chart. What's my 21-3 chart say? Weakening triggers, divergence, pushing down, couple divergences, everything pushing down. Absolutely. So the synthetics are your 13.2 large. And look at how your large triggers, the last time they got below was where everything started at 4006. They work above, they work inside. And guys, those large triggers, they get a little, nope, they're still inside. Still inside, trending together. There's the first time those large triggers get below the synthetic, guys. That's the one that lets you know, don't go long from that 1-to-1. Do you see it? Paul, let's see what you did. Termination condition. Ooh. Incomplete thoughts, Paul. Incomplete thoughts. I love it. But check this out. Bad top, I agree. Termination condition, absolutely beautiful. That's the one though, isn't it? Look at your trigger lines as you come back and retest 82.49. Your large triggers are still below the area as well. You do, and that's okay. We found your pattern, Paul. Apparently you adopted mine. This was my pattern. I would trade directly into a wall of support or resistance, hoping that it broke. I said that it would break because of what I see here. And remember that this termination condition is awesome right up to that next one. And this was one of the conversations I had with my brother over the weekend. Notice how every large trigger stays below. Just like every large trigger is above support, we're not going short, but every trigger is below. Here's another one of those channels. Let it break. Someone's going to win. We don't have to. Trend trade long. And then you get to the wrong side of those trigger lines. And when everything rolls and comes back, John's looking, and there's that 13.2 mid-band should get hit. John says wrong trade. Notice how the small triggers begin to come through. Great indication. Gary? And at the last ditch effort, you have 1-to-1s and an HVA supporting it. That's that tight stop picture again, Gary. Did we make the mid-band? Look at that. There's our green box. Even without the 13.2. What a great profit target, right? So now we have a market that's been trending up. We've got this green mid-band. All the triggers are above it. It looks like a perfect high probability trend trade short. We'll see what happens. If that was our first target, none of the trigger lines are through, do we want to trade directly back in the target? This is where you may take a shot at a medium probability. Well, I've got a mid-band right here. I've got no divergence. I've got strong triggers everywhere. Does an 8-range chart support the look? Well, that's directly into its mid-band, but the small's below. Does a 21 chart support the look? Divergence printed. With all that strength, maybe they'll get to the mid-band, right? But look at how far away those large triggers are on your 21.3. Coming off of a mid-band, that 48 area becomes a potential retracement spot. You're really in a hurry up and wait. They didn't really give you a lot of opportunity to get down there. Gary going long against triggers, against trend, against strength, against momentum. What kind of trade is this, Gary? This goes back to the, if this is going to hold, these are going to roll a little bit, guys. No reason to fight that much strength. I think pivot from space to mid-band, but Gary had already hit the mid-band, didn't it? There's your mid-band. But just because there's a mid-band there, you can't fight strength. You can't fight direction. You can't fight momentum. You might get lucky on it once. But let's do this. I think this is a powerful look. Is there anything about these trigger lines that say that it's time to go long? If all you're looking at, okay, so market flow signals when the rules are true. Just a little safeguard for you. When you're looking at market flow, the first thing it tells you is when rules are true, whether it's a trend trade or an HVA. If you only trade an up signal on an 8 range chart and you're fighting this look, I could literally teach a class with this look that says that the odds are favorable for the market to continue down. And I know that we get excited about areas, but right now the market is fulfilling every expectation of that trigger line look. And if it's really going to hold, oops. If it's really going to hold, then this 5-1 is going to roll a little bit for you. Yuri, taking that trend trade, target hit, just trading with strength, with momentum. I like it. John Novak taking the same trade with strength, with momentum. Sure. Bob, can you take a picture of your crude oil 13.2 and let me know what you see? And we'll talk about it 100%. Tony the Tiger, with strength, with momentum. Dare I say that trade was great? Nice job. That's right, I did that, guys. I dad joked you right there. Absolutely. So Bob, and this is very similar, and I'm going to find Paul's post where he patiently waited for the areas to break. We haven't gotten through resistance yet, so we can't go long. Well, you can, but it's ill-advisable. We haven't made it through support, so there are no short trades. So this becomes your area, just like you said, Bob. Good job recognizing. We got to get out of this range, right? We've got to let that area break so that we have the advantage of a clear path one way or the other. And then Paul had a great example earlier of this. We had the same thing. And this was crude oil as well. Caught between these two termination conditions. And then when it broke out, that's when Paul capitalized and made money on the winners there. Good recognition, Bob. It's just stuck. And until there's that breakout, yeah, waiting's not fun. But, ooh, I'm going to reference being flat is literally putting money in the bank if your state of mind is wrong. If you're forcing trades, something like that, it's better to stay flat and wait than to hope. And then George T taking that same trend trade short with all the momentum going through. Too many things said down to not go down, right? Stopped you out? Well, you made your first profits. You're still fighting a mid-band and a crazy uptrend, right? So let's look at what it did. There's that crude oil. Bob, you can see that the buyers are trying, but we're right. We still haven't broken that key area. The buyers have the edge, but there's still no clear path. And then if you took that first trade into the mid-band, guys, remember, what did we say? Mid-band's the first target. You had a clear path, no divergence, easy entry. Now you have divergence on one of those 50-50 style trades, right? This mid-band was your first target. It hasn't broken yet, but it does have the potential. Gary, there's the start of the slowdown coming into the key area. Let things reverse a little bit. Let things change. This is a great spot for that market to bounce and head the other way, but you got to let it slow, right? Otherwise, it's just going to keep going with that momentum. Good pictures. Jonathan, great entry, great first target. Divergence prints on the 50-50. You're not willing to lose money on it. Nicely done, Jonathan. Great trading today. So what do we think? Paul, in a market that has gone up 50 points and has trended to the upside and smashed anything in its way, and you get a pivot from space, Paul, what's your first target on a pivot from space? It's a mid-band, right? So now we're just going to get into expectations. It's a mid-band. When we reach that target, when this market, look what the market's done. This is the first time since 10 a.m. that the market has pulled back. So let's use that trickle down again, right? Everything trending up, it pulls back to the mid-band, is the exact same as all those mid-band longs on the way up on the 5-1. So for me, let that thing break with certainty. Does that make sense, Paul? It's not a termination condition in the sense that the large triggers are a full bar away, but you still have to create those expectations. Just like the mid-band is a place for continuation on the 5-1, it can also be on this larger chart. And then if you look at your 21, whoop, that's my 8 range. If you look at that 21, if I can find my 21, I swear I have a 21, guys. Now we have that divergence, and look where the large triggers are here, full bar away. It may get all the way down to 32, but I'm going to make it smash through 38 before I take any more shorts that direction. And then RJ, the mid-band is a single solid line? Absolutely. So the mid-band is a moving average, which is why it's gonna fluctuate as things come up and come through. So the mid-band just kind of becomes a center point. So we reach the mid-band. You're welcome. The first time with no divergence. It pushes down 5 points. Now we have a loss of momentum. Now we have small triggers working their way inside of the large. Add a key area for a bounce. We still have the momentum, but when that pivot doesn't come from anywhere, that mid-band's the first target. Write that down somewhere, guys. When the pivot doesn't come from an area, that mid-band becomes a target. Catching the echo, John? Yeah, there's just a little bit of delay. So if you have sound on both, then it's really kind of crazy. Good stuff, guys. How we doing? We got a little bit of time left in class. Bob, I'm not going to lie. I have no idea what VWAP is. So So John's going to give you a resounding no. Fibonacci. John probably knows what VWAP is. I have no idea. And that's always the best advice. If you're using something that works great for you, Bob, find a way to incorporate. And you know what? Since I know that we have your attention right now, let's look at natural gas, guys. Let's look at another chart, because what we do works on any time frame. It works on any market. It works. So at 1138, we had everything below resistance. The market pulls right back to resistance and continues down. It's one of my favorite looks there. One-to-ones create a full reversal, give us odds favorable momentum at 1133. Pulls right back to a mid-band inside of favorable large triggers. Volume weighted average. Thanks, John. Support holds, but because there's not odds favorable, we're not looking for that opportunity. There's a great looking trade that didn't work, and I certainly don't mind showing these. Odds favorable, no termination conditions. Pull back to a mid-band inside of favorable large triggers, guys. Anything that wins 70 to 80 is going to lose 20 to 30. It's just basic math. Coming back to 1047, there's a pullback all the way back to those large triggers, to resistance, to the mid-band, and it happens to be resistance right inside of favorable large triggers. So when I say inside of large triggers, RJ, rule number 3. And then Bob, in the moment, resistance, large triggers are a full bar away. Odds are favorable. It's going to close that gap, especially from a pivot, not coming from someplace. We'll come back and check on it. RJ, let's go to rule number 3 again. And this is going to be the one that I think works the best for you. When you're looking for a high probability trend trade, you're looking for the market on the 5-1 to pull back to an area of support or resistance inside of favorable large triggers. So let me take a picture of this one. So when you're looking for your entries, RJ, when you have momentum, when you have no termination conditions, the yellow box represents the top of your large triggers to the bottom of your large triggers. This purple box will be your window of opportunity from the highest point of support to the lowest point of support. So when we talk about an area inside of favorable large triggers, this becomes the area where the market is likely to continue. And this is rule number 3. So rather than jumping in up here, it's that same concept. As price accelerates away from the large triggers, it tends to pull back. When I have one of those Fibonacci-based indicators inside of those favorable large triggers, this becomes the area where the market is most likely to continue. And this becomes your highest probability entry for a trend trade. Does that make sense, RJ? Absolutely. And we recognize those. Let's go to, and this is a good example on crude, waiting for that fight to end. When an 8 range bar becomes a white bar, after a breakout, Alex, and I'm not sure what the other side of it is, more of a tech question on the bar structures and what they do. John Novak could probably answer that one. Bar that turns white. Volume breakout of prior volume bars. There we go. There you go. And that's kind of two ways to look at something, right? Why it turns white and what to do with it are two very different things. So now that midband has been hit, right, from divergence from space, but it was too soon to go long, but now we've got the smalls on the other side of the large. That's the first step, letting us know. Small triggers have turned up on the 13.2. Just executing that patience a little bit. Guys, we've got about 10 minutes left. Rather than ramble, and I do ramble sometimes, and I apologize for that. Let's look at Discord real fast and just give you a little tour. Yeah. So Alex, what you'll do, and this is what I tell a lot of people to do, is when the rules for a trend trade are met, look at your 8 range, and a lot of times successful trend trades, you may recognize a white bar going into the area that generates a signal. When you've got a great termination condition, you may recognize a white bar right at the top, and it's really just a matter of going back and studying. But I don't have time for that. What I do have is John Novak saying, here's some great trade rules. As I'm just not a tech guy, I don't understand the structure so much, but I do learn how to read the indicators, and I let someone like John Novak lead the way. Guys, from the Discord, from the homepage, self-training, this is everything that you need and everything that we talk about, and I want to scroll towards the bottom and just show you. Yesterday, there was the addition of 25 pictures. And RJ, this is great for you. Great looking entries, 3 charts coming through. Guys, 25 examples of when things look the way they're supposed to look. Here's your user guides, everything from the web page, your trading rules for HVA trades, momentum trades, and trend trades. There's a whole section dedicated to chart reading. John Novak has gone through and annotated dozens and dozens and dozens of charts to help you recognize patterns. And there's even an advanced section. As you grow through, you'll begin to see more and more. There's example trades presented in the traders chat room by people with a decade, 15 years. You're going to see different charts. You're going to see different looks, but you're going to recognize these trades as having advantages. And then there's the trader chat section where the users, people that trade Nexgen software that have traded it for decades in some cases, post their trades. So all of that's available to you. Each and every one of those is available as a resource. Take some time to explore. Ask some questions. Paul? All right, Paul. Watching the fight, right? Good bottom. Termination, 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 termination. And now you're 50-50, right? The smalls are beginning to break, the large are not. You have odds favorable momentum. What's your 5-1 look like? Divergence prints on that 50-50, pulls right back, able to take quick profits, no reason to lose. If the sellers are going to win this lineup, you're on the right side of things. Oh, that is natural gas. And there we go. That 50-50, there's your second divergence pushing up. But you'll see a lot of times in range-bound markets, guys, this 50-50 trade, this potential to break but not broken, when it wins, it typically wins big. And when it loses, the market typically goes the other direction, and the other side of the coin takes the advantage. Gary? Now things are starting to roll, right? No trade yet, but now we're starting to see that roll. We're starting to see that slowdown. We're starting to see that potential change of thought. I think you had the right idea, just a little early. Just a little bit early. And now look at what we're doing. The large triggers are starting to roll. I've pretty much run out. After a move that big, fibs are going to update in 5 minutes. We'll probably get some new ones, but when you get a run this large, you tend to see a little bit of space happening. So too soon here, and now it's starting to change a little bit if it's going to change. If you're looking for that momentum style coming off of the triggers, maybe not a good view. Just being patient, right? Sometimes it takes a second. Hasn't been this high for a month. RJ, everything set down. This is a good one. I like this one. You actually waited for the pullback. Very nice. Exactly. Well, they recalculate every day on the swings, and they're intraday swings, Gary. It's the movement today that's created, because when we opened our software this morning on the 13.2, it measured every swing on the 13.2. So we've had swings. It hasn't been straight line, but today, because it's been straight line going through, we're in a different range right now. So it's going to reassess. RJ, I love the pullback to the mid-band. Perfect. No reason to go long yet. You're fighting everything. No reason to go long yet. You're still fighting, RJ. Remember, let them slow down and let them roll. This one trades with everything, every direction, the strength, the momentum, and you'll notice that that market continued down. This one, we kind of jumped in. You were able to make profits. Notice how when you jump in at the bottom, it gives you that pullback right to resistance inside of favorable large triggers. One of the reasons rule number 3 is so important. In RJ, that mid band needs to be inside of favorable large triggers. Right now, your mid band is up, your triggers are down. Things don't agree just yet. Not yet. A little premature. Great picture, though. I love the ones where you're trading with the momentum, with direction. See how everything says down? Good stuff. And they probably will. If you watch, there's a 12 o'clock. So at 8 a.m., the fibs recalculate, George. At noon, they'll recalculate. At 4, they'll recalculate. John would know a better answer than I would. But what you'll see is, here's your 8 a.m. fibs. Let me make it easier to see. At 8 a.m., we got Fibonacci support here. And we also, let's see, those are smaller chart moves. This is where we got that 4017 fib, is at 8 a.m. So we'll hang out for a minute and we'll wait and see if we get any fibs in just a second here. And Kevin, I am in Eastern time frame. That's where the Nexgen server is. So I want my midnight to match their midnight, just so that my charts match up. John, you took the shot at the uptrend. I had a feeling you would do that. Mid-band likely to hold. Smalls get above the large, pulls right back to the mid-band. Looking for 51. And see how rather than trying to go long here, he at least lets those smalls get on the right side. Kevin, yeah, I'm on the West Coast right now too. I'm sitting just north of LA, and my clock is on Eastern so that I can have my stuff on the same time frame. And it may not update because of the strong move. Well, it'll update, but it may not provide it. And again, guys, I'm really good at reading indicators and teaching you how to read indicators. I'm not the most tech savvy guy. To get new timestamps? Oh, yeah. And we're just talking about the fib update. Isn't there a noon fib update, John? Can we anticipate seeing something? Or is that large move up going to negate it because there's not enough swings? Oh, we need a new bar afternoon. Okay. Need one more good trade. So the 13-2 may take a minute. We'll see. Guys, watch your 13-2. I didn't realize that it needs a new bar. So once we get that new bar afternoon, we're officially afternoon. Awesome. George, I still learn something every day. Target 1, 0 loss level. Nice job, John. You got stopped out. Cool. Guys, that's it for me today. Thank you for being here. Thank you for asking questions. Thank you for the input. When the midband is inside of the large triggers, RJ, do you need me to send you a picture of that? But remember, just because it's inside of the large triggers doesn't mean that there's a trade, right? All it means is that there's a midband inside of the large triggers. Without odds favorable momentum, without no termination conditions, well, it's right there at it, right? Those two are intersecting right at it. If you want a better picture of it, I'm sure we have one in here somewhere. RJ, there's a midband inside of favorable large triggers, but I think even more importantly, if you want to see that great look over and over, come to Discord and go to the self-training, and you're going to see 25 of them from this post right here. So let me copy the message link and give it to you. Go take a look at those, and that's going to help you a lot, I think. Just visually giving you that great look. No worries. And there's the Discord link for it. Study those, and we'll keep working on this. You and I'll keep working on this together, making sure that you're starting to get the idea and things are coming together. And keep asking all those great questions, man. Guys, I will see you tomorrow morning. We're going to do this again. We're going to read indicators. We're going to look at your charts. You guys keep posting. I'll keep answering. John Novak will keep giving feedback. So Paul, on a 50-50, 2 areas not broken, 2 divergences, you're going to take that larger, you're going to take that higher entry. All right. Everybody's plan is different, right? Everybody's plan is different. Waiting to see if there's a third divergence. Guys, thank you so much for being here. Safia, look for that capture software so that you can annotate charts. Hey guys, I will see you tomorrow morning. Enjoy your afternoon. Thanks for being here today. I appreciate you guys.